Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen a very strong upside move and a test of the 87.5 to 89.5 resistance, where so far we've seen a bit of a sell response. Heading into the open, the buy side is in firm control and our short-term directional bias is bullish. So the focus is going to be on long setups at the support zones below. The only thing to consider is the upside potential from this point on. Given how much the market has already moved here in the overnight session, there may not be too much left beyond the 87.5 to 89.5 resistance area. It doesn't mean that we can't break that zone and test 93 to 95. That is within the range potential of the day, but you do have to be aware of where you're initiating along in this market. If you're buying too high, it doesn't mean that the market's not going to continue going higher, but you do need to have that underlying momentum favoring the upside from an aggressive spot. So on our end, the main idea is going to be to be patient, wait for a pullback into a support area. The first area of support is 79 to 81.5. That is a potential long setup on first test. And as long as we aren't seeing any major bearish signs in real time, so as long as we're not seeing sustained downside momentum or just a lot of price action that's telling us that there are some bigger sellers stepping in, the focus is going to be on initiating longs at pretty much every support area along the way. So 79 to 81.5 is the first area of support, and the market may hold there, and from there we could go back up to 87.5 to 89.5 and possibly punch through that for a test of 93 to 95. Now, at 93 to 95 and beyond, the risk reward really does not favor buyers anymore. So once you get to 93 to 95 and especially up into 97 quarter, 99 quarter, at that point the risk reward shifts from the buy side to the sell side. And those are areas where we can look for short setups. But right now up here, 87.5 to 89.5, it's a questionable zone whether it's going to hold or not. So it's a zone where there may be a short setup depending on how the price action develops in real time. It is an area of resistance until broken, but given that we have some time frame alignment now to the upside, the only edge that sellers are going to have is ideal trade location, which means that if you are initiating a short, then you better have a very good price. Otherwise, there's not going to be as much edge. You may not be able to sit through some short-term chop to really get much out of it. The risk reward may not be there. So, on the short side, we have to be cautious today. The focus will be on the long side. 79 to 81.5 is a decent enough spot in the event of a break below that. 74 to 76 and the 68.5 to 70.5 are also good areas for support. Now, if the overnight strength is going to remain intact, then ideally you don't want to see a pullback all the way back down to the overnight low to 68.5 to 70.5. Ideally you want to see the market holding 79 to 81.5 or worst case scenario 74 to 76 and then start balancing at higher prices. And the way the market is shaping up right now, we may not get a big retracement. And that would actually be ideal for the buyers, is that 79 to 81.5 holds. And from there, we go back up to 87.5 to 89.5. And from there, possibly into 93 to 95. And in the event of really a range extreme, you may go into 97 quarter, 99 quarter, although that zone is a bit of a stretch at this point in time. So the game plan is our directional bias is bullish, but at the same time, we have to understand that the market has already moved quite a bit here in the overnight session, so we still have to be aware of our entry price, the trade location on the longs that we take, and if that means that we miss a move from this high price to yet another higher price, then so be it. But ideally, you want to wait for a pullback. Getting involved at the highs here would only make sense if there were a lot of upside momentum behind the trade, and even in that case, you would really have to manage that trade much more closely. So, it's possible, but it's not really the conservative setup. It would be quite aggressive to buy the market up here. and look for a move into 93.95. So that's something that we will need to gauge and assess in real time. So the main idea is going to be to look for long setups on pullbacks, and then be aware that the range is already kind of getting exhausted up here. So, on the target, probably look for a move into 87.5, 89.5, maybe 93.95, depending on how the market sets up in real time, because we could just balance within the overnight range, or maybe extend the range by a little bit and then start balancing yet again. So those are the main ideas heading into the open. Let's see if the buyers can maintain the firm control that we've seen here overnight, and we'll take it from there.